Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, good to have you on the show.
Yeah, great to be here. Love that new intro, Brian.
Now, Jeff, before we get your insights, let's take a look and see how the crypto markets are performing, and then after that, look at how regional markets are performing. So we'll start with Bitcoin. That's at 46,865. It's up 3.95%. Ethereum is at 3,393. It's up 3.45%. If you look across the region, we've got Bursa Malaysia, which is at 1,551.37. It's down 0.27%. The SGX is at 3,060.19. It's down 0.66%. We've got the Nikkei at 30,523. It's down 0.48%. Shanghai Composite bucks the trend. It's at 3,673.86. It's up 0.31%. The Hang Seng is at 25,259.66. It's down 0.95%. Rounding up the numbers, we've got the ASX 200, which is at 7,422.9. It's down 0.19%. Jeff, what's your view on how markets have performed across the region?
Well, Asia got off to a pretty ugly start. We had a very soft session overnight in the US due to the low inflation prints that we got out of those markets overnight. Then the China data came out today. We had fixed asset investment, industrial production and retail sales. Now, all of those numbers came out softer, but the one that really frightened the markets was retail sales, which rose by just 2% when it was expected to rise, I believe, by around about 5.5%. Huge miss. Chinese officials have tried to put a brave face on it, blaming COVID-19 lockdowns and also flooding, but you can't get past the thought that these ongoing interventions in all these sectors of the economy by the Chinese government is either sapping consumer confidence or leading to job losses, which has knocked the retail sales numbers down. The actual market has recovered slightly since that data came out, and I'm actually wondering if China's national team is actually in the market smoothing some of those moods, as they put it, and particularly mainland exchanges. There may also be a feeling now that China's government may open up the fiscal spigot to try and offset some of that slowdown in the economy. But I think this looks like a dead cat bounce.
Now, but Jeff, that's also something that's out of their old playbook, isn't it?
Oh, absolutely, mate. Absolutely. I don't think that we're going to see China panicking over 1 month's data. I think that if we see a similar sort of set of data next month, though, then we're going to see some firmer or more direct action by mainland authorities. But I think we can pencil in another PBOC RRR rate cut sooner rather than later now to give the banks more capital to lend.
Now, let's look across to the US. Now, overnight, the US Department of Labor reported that the CPI index, or Consumer Price Index, in August posted its smallest gain in 6 months. Now, this is suggesting, obviously, that inflation has peaked and is completely aligned with what Chair Jerome Powell has been telling us all along, that high inflation is, in fact, transitory. What's your take on this, Jeff?
Yeah, I think that the headline number is a little misleading, because when you start digging under the bonnet of all the subsectors, you'll see that used car prices, which have gone crazy in the US over the last year, and airline fares both fell quite substantially last month. Now, the reason for the airfare fall is quite obvious, but if you look at other sectors like rental, which normally lags the actual housing price market by about 15 months, and also food prices and energy, you can see those all rose. And when you look at natural gas prices, I'm looking at natural gas prices around the world. We're not even in the Northern Hemisphere winter yet, but those are absolutely ballistic at the moment. I can't help feel that energy is going to make an impact on these numbers. So although transitory inflation may have taken a few punches from sticky inflation, or the opposite way around overnight, I don't think that sticky inflation is out for the count.
And Jeff, for the rest of the week, what are the key data points and events that will move markets?
Well, I think the market's going to trade on sentiment now for the rest of the week. And let's be honest, that sentiment isn't overly positive at the moment. So I think equities are going to struggle for the rest of the week because we don't really have a lot of major data points. We have none really globally to change that narrative. Next week gets rather more tasty. We have, by my last count, around 9 central banks around the world coming out with policy decisions, including the Bank of Japan and, of course, the Federal Reserve Bank. But there's a plethora of central banks around the world making announcements. So we're going to get a bit more to get our teeth sunk into, so to speak, next week. Of course, the highlight will be the FOMC and whether they decide to give us more guidance on their tapering schedule or not.
Now, Jeff, as always, thank you very much for coming in and giving us your insights.
Always a pleasure, mate.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook and LinkedIn pages, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thank you very much for tuning in.